Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video I will be revealing the only smart money strategy that you will ever need to succeed in the FX market. In order to do so, I've broken the strategy down into 4 simple and easy steps that you can start implementing today and actually make money within the Forex market. Now, each and every single step is very important, and you need to follow exactly what I say in order to make the entire thing work. So, with that out of the way, let's actually get started. Okay, traders, let's actually start breaking the strategy down. Now, I will start by listing the 4 core principles that you will need to follow to make the strategy work. And the 4 principles are the following. The first one is structure. The second one is liquidity. The third one is your POI selection. And the fourth one is your confirmation / trigger. Okay, so these are the 4 principles, and I will go into in-depth explanation of each and every single one of them so that there is no gaps or confusion, right? So let's actually get started with structure, which is pretty important. So for that, let's draw a potential bullish market. We can all agree this is a market that is pushing up. And let's imagine this structure right here is your, for example, 4H time frame. This is your 4-hour time frame. And the rule within structure that you need to follow is the following. You need, and this is crucial guys, to wait for the higher time frame and lower time frame to match. Now, what do I mean by that? So as we said, this is our 4-hour time frame. And if you zoom into a lower time frame, potentially a 15-minute, 5-minute time frame, what you will find is that within this 4-hour bullish market structure, yes, the lower time frame will be doing something like this, right? Well, you will find that price is pushing up. However, you have quick breaks that then resume the bullish trend, and you may be wondering, well, I sold here and I lost, and that's because your high time frame was bullish and you just went ahead and sold because the lower time frame quickly switched bearish for a second, right? So the lower time frame will be pushing up and then it will completely switch, right? Maybe continue bullish for a second, but then continue switch because now the higher time frame is retracing, and until the 4-hour retracement is done, the lower time frame will not shift. So your job within structure is to actually catch the end of those retracements and ride the impulsive continuations back up, right? Your job will be to execute on this area, this area, this area, and essentially at the end of the 4-hour retracements. So you will then wait for the 15-minute and lower time frame to shift bullish, and that's where you are going to execute to potentially retest the highs, which is going to be a very high probability setup, or depending on how you manage, you can actually say, okay, we made a high, we potentially have a higher low here. I'm confident in holding to a potential new higher high. So yeah, that's in regards to structure, and do not worry, I will be giving charts examples in a second, but I hope that was clear and you can understand it. Your job within this strategy is to try and catch the the ending of the retracement within the higher time frame so that you can resume with the higher time frame expansions. Now, I don't want you to stress about the idea of trying to catch the very bottom of the retracement, right? Because there's plenty of opportunity to make your money within the expansion, right? You don't need to worry or stress about the idea of catching the very bottom. This was just to illustrate the principle that you need to keep in mind when looking at structure, yes? So let's actually continue drawing the structure, right? So the lower time frame hits the higher time frame end of the retracement, then that means that the lower time frame would then continue and shift bullish, right? That's where you look for your entries. You can potentially get an entry here and continue up. Now that doesn't mean that price cannot break short-term structure, right, and flip bearish to then just continue up, right? And the same thing will be happening over here. We make a new high, so the higher time frame needs to retrace, and that means that the lower time frame is going to flip back bearish until the retracement is done, and it will continue back bullish. Now, you don't always have to expect that price will retrace the entire move up, right? For example, if you have a structure like this, that doesn't mean that price is going to come back here and then resume, right? There's multiple options here. It can retrace 50% and continue. It can retrace deeper without coming to the edge and continue. So you need to be aware of that, okay? You're not always going to get the perfect retracement towards the edge of the structure, right? So now that you understand that, let's actually look at the charts and try to implement the ideas I've just told you. So we're looking at GU on a 4-hour time frame, and let me see. Okay, so as you can see here, we've got a low, we've got a high. This actually breaks structure because we clear all this. This becomes your new high, and then as you can see, price slowly retraces, right? Shifts bearish during the retracement, as I've been telling you all the time. That means that the 15-minute, potentially the 5-minute, is going to be extremely bearish at the time, and then you hit the end of the retracement, which in this case does come to the origin of the swing and continues higher. So that was everything in regards to structure, and let's now continue with the second rule, which is going to be your POI selection. So let's go back to the drawing board and continue with the remaining of the rules. So let me clear all this. And I know I said before that the second rule was liquidity, but we're going to do liquidity and POI at the same time because I think that will provide you a much better understanding of the concepts and the ideas behind the strategy. So POI stands for point of interest. And liquidity, I just previously made a video on liquidity, so if you do not understand that, you can always go back there and watch the video. But let me give you the rule within liquidity for this specific strategy. The rule is the following, which this is too big. You need liquidity to be grabbed into POI, right? You need some sort of liquidity. Any liquidity type is valid. As I said, there's two different types of liquidity. There's hidden and visible. You can go back to that video for that information, but any type of liquidity is valid, right, for this rule to be fulfilled. So anytime you have liquidity into your POI, your liquidity rule is fulfilled. Now, in regards to POI, you need at least a 61% retracement of the impulse for a POI, okay? And do not worry, I will illustrate that in a second. So 61% plus retracement is necessary to consider a POI. And let's actually go back to the charts because it's going to be much better to explain that. Whoops. So let's continue with GU. And let's try to find what I mean, right? So this is a okay example. As you can see, just ignore all this previous stuff. We're just going to be focusing on this, right? So you have a low, you have a high that breaks structure right here. So this is an impulse, right? This is your bullish structure and you're waiting for the retracement. Now, the POIs you can use within this impulsive leg, as I said, must be below the 61% retracement. So for that, you can always grab your FIP. You can draw it from the bottom to the top and any POI, right? So when price is below this area, from here to here, is where you can frame your POIs, right? Anywhere above it, you're not looking for buys. Why? Because the probability of price continuing in deeper retracements is there and you don't want to get caught into that, right? So That's pretty much it for POIs, right? You need price to retrace at least 61% for your POI. Now, you will probably have the scenario you have multiple POIs. As you can see, we have one here and one here. So what you would do is actually draw all your potential POIs below the 61% retracement. That's pretty important. And then you're going to wait, right? So that's in regards to POI. Wait for price to retrace at least 61%. And that's how you're going to get the high probability ones. So that's that in regards to POI. And in regards to liquidity, I think it's also pretty clear. This will be a valid example of liquidity or inefficiency being grabbed into your POI. As you can see, we've got some sort of trendline liquidity here. So your liquidity aspect is fulfilled, right? You can put a check on that. Liquidity has been grabbed into my potential POIs. My POI is also valid because it's below the 61% retracement. So you can do that as well. And my structure point is also valid because we just made a new high. So in this case, all the three rules would be fulfilled for you to actually look for entries within this region. Now, the only thing that would be missing now is your confirmation trigger, and we're going to get into that right now. For your confirmation or trigger, there's multiple ways of doing that, and I'm just actually going to give you a method that works very well. It's not my only entry criteria, but it's one that I've been using for a very long time and works very well. And for that, let's actually go back to the drawing board. Let's remove this and let's talk about your confirmation. Now, your confirmation slash trigger will happen inside your POI, okay? The only scenario where you can look for confirmations is within your POI. If price is not within your POI region, right? If price has not done the 61% retracement, just like in this case where price barely retraced and continue high, then you miss the trade and you need to accept it, and you are not going to FOMO into a trade here, there, and there, right? Because that's only gonna get you hurt. So it's pretty important that you wait for your confirmations only inside your point of interest, which means once price reaches your point of interest, then you can look lower time frames to potentially catch your confirmation. And the confirmation I'm going to show you now is pretty powerful, works very well if you have if you have structure right, liquidity grabs, if the impulse move has been retraced more than 61%, then your confirmation is going to be powerful. So let me actually give you an example of a confirmation, right? So let's imagine you have, let me get this back. You have a bullish structure like this, and you're waiting for your POI right below the 61%, right? Any POI inside the region would be valid, and price, whoops, let me delete this, price comes back down. And for your confirmation rule, what you will need to do is look and zoom into lower time frames to see the price action developing inside your POI, okay? So one of the confirmation rule I will give you here is the following. You will need some sort of liquidity creation in form, for example, of consolidation, a grab, liquidity grab, and a break of market structure. That's going to be your best confirmation. And trust me, guys, I've been doing this for a very long time, and this is what exactly works. You need to wait for the market to engineer liquidity while it's in your POI. You need to wait for price to grab the liquidity within your POI region, and then you need to wait for price to break structure, right? So let's actually write it down. Confirmation is liquidity engineered within your POI or right above or below it, right? If the market was to engineer, let's say, This is your POI. If price was to engineer liquidity just above it without touching it and then grabbing it and then you get the break, that would be also valid. Yes. So liquidity engineered within your POI or very close to it, and a break of market structure. That's going to be one of the best confirmations I can give you here on YouTube for free. You're going to wait for price to reach your POI with all the rules I gave you before. You're going to wait for the market to engineer liquidity, which could be in form of consolidation and in the form of potential equal lows, right? That then get grabbed and then the break. And then, yeah, that's pretty much it. You need to wait for your confirmation, which is the grab of liquidity within your POI and the break of market structure. So now that you understand the four different principles of the strategy, let's go back to the charts and let me give you a quick breakdown of how it would look when you put everything together. And for that, I'm going to walk you through one of the trades that I took last week, just following the four principles, right? It was on EU. So we're now looking at Euro USD. And if we look at structure, right, your rule number one is your structure, lower time frame, and high time frame structure need to match. So let's go ahead and confirm that idea. So as we can see, we've got a lower high here, lower low, lower high, and we just made a new lower low and we're retracing. So structurally we're bearish, but currently we're retracing, so we're bullish, right? So we need to wait, and we're going to wait for our POIs to be hit. And as I said before, any POI inside the 60.18 retracement is valid. So you would go ahead and grab your fib tool, place it at the top, drag it to the bottom, and wait for price to reach any POI inside the 60.61% retracement. So let me go to a slightly lower time frame, maybe a 30-minute, maybe even the 15-minute. So now we understand that, hey, any POI above the 61% retracement is valid for me to look for sales, because structurally we just made a new low and all we're doing is retracing to create that new lower high to potentially continue lower, right? So let's play price. And as you can see, I had this POI marked at the time because this is a POI that is above the 61% retracement. So that's a valid POI. So let's continue. Let's see what happens here. And as you can see, price comes to our POI. This is the moment where you would look into the lower time frames for your confirmation rule, right? But as we can see, we've grabbed liquidity on the way up, created the low, and now we're retracing. So your structural rule is met, your liquidity rule is met, your POI rule is met because we are above the 61%. And now all is missing for you to execute your position would be that confirmation trigger. So let's see how price develops inside this price action. So okay, we're watching price. Price hits the POI. And let's continue watching. Price plays within our POI. We're not executing yet. And as you can see, price comes back up. There we go. We can see here that we just created liquidity, right, in form of this consolidation. We just spiked above the high, as you can see. We should be spiking above the high. There we go. We spike above it. With this wick right here, we clear all this liquidity, which means that now the liquidity factor of your confirmation is valid, and all you need to do is wait for that break in market structure. Now, it could get confusing because you may ask yourself, well, why do I use this or this as a break in market structure? And the answer is this, because this is the true origin of the swing. So you would wait for this low to be breached. And once you get that low breach, we can continue. So you don't have to execute here, you just need to wait. So let me speed this up. Price breaks below it. Now we're valid to look for sales. Why? Because structurally we're bearish. We're at the end of the retracement potentially because this is the lower high, and if they want to continue making money selling, they won't break above this high. And the lower time frame has officially shifted. We have a shift in the lower time frame market structure. So all you need to do is wait for the origin over here. I would wait for a POI somewhere in here, and I would place a sell limit with your stop loss just above the highs. And you can target way lower because you know we're bearish and we should be making new lows, right? So let's see what happens here. Price continues, plays around, essentially is creating more liquidity with these movements up and down. And as you can see, whoops, price comes back up, taps you in, right? All your rules are valid, so you can take this trade. And let's see what happens. Price plays around for a bit. Let me copy this just so we don't lose this and drag it over because it's getting too big. Just like that. And price continues to melt. And all you did in order to catch this trade was follow the 4 simple rules I just gave you, right? We had bearish structure, we have liquidity being grabbed into your POI, we have a valid POI because it's above the 60.18%, and we got the confirmation inside our POI. So yeah, that's that. So I'm actually curious to see what happens here. So let's wait for that. As you can see, price is taking its time, so maybe zoom into slightly lower time frame. A higher time frame, sorry, and as you can see, price just continues to melt. And that's how you can have a profitable system. I can guarantee you, if you follow this system, you will make money within the markets. So remember, structure needs to match, liquidity needs to be grabbed, your POI needs to be valid, and you need to have your confirmation. So I hope this video was useful. Again, if you don't understand liquidity or POI selection very well, feel free to review my previous videos. I go in depth on them, so you can go watch that. And I appreciate you guys tuning in, and I see you guys next time. Until that, I wish you profitable trading.